Good morning, good morning, good morning. Yes, I do sound like deaf. I apologise. Welcome to today's morning blast. It's good to be back. I think we're back. As usual, myself and Mr. Michael Brown will be giving you a roundup of yesterday and a preview for the day ahead. But before I do, let's get the legals out of the way, assuming you can understand a single word of what I'm saying. As usual, nothing discussed on this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ. Myself, Ryan Paisley, I had to think about that. Or indeed, Mr. Michael Brown. Mr. Brown, how are you?
Good morning, Ryan. Good morning, everyone. Very well, thank you, mate. Full of beans, full of vitality this morning, and by the sounds of it, the same can be said for you as well, mate.
Yeah, no, absolutely. I'm feeling top of the world, mate. Thanks for asking. Oh,
I
God.
mean, you're alive. You survived your trip.
Um,
That's the
well,
main thing.
well, apparently I'm alive. I'm still waiting for confirmation, but yeah, I seem to be here.
Yeah.
Yeah, we'll see. But yeah, let's carry on quickly before I fall into complete disarray.
Oh dear, I think you're already at that point, mate. To be honest with you,
I
but
think so.
it's all
I
right.
think so.
I've got a bad enough back as it is. It'll only get worse from me carrying the show
Oh, well
today,
done,
but
well
never
done.
mind. Right, good morning, everybody. It was a pretty subdued day yesterday, actually. To be completely honest with you, we spent pretty much 16 hours just sat there watching paint dry, really, looking at terminals and waiting for news out of the US-China trade talks, which concluded yesterday here in London around about midnight local time. In terms of the conclusion from those talks, to be completely honest with you, it's not exactly the meatiest of statements that we've had as those talks have concluded. Both sides saying that they have reached consensus on a framework for the implementation of the agreement made in Geneva around about a month ago. And that framework has now been sent to President Trump and to President Xi. And if both of those two agree, then that framework will be implemented. Now, I do apologise for the rather vague nature of my language here, but to be completely honest with you, there is absolutely nothing by way of details, by way of meat on the bones in terms of what this framework may include. And certainly none of that is coming from China. We've heard from the Foreign Ministry spokesperson this morning, Mr. Lin, who said that he has no information to offer on the US-China meeting that took place in London. So very, very thin on the ground in terms of details. But I guess the overall point around the direction of travel being towards agreements being made, being towards cooler and calmer rhetoric, that does continue now that those talks have wrapped up, even though they did drag on for quite some
Just
considerable
just on
time.
this, you're completely right. Obviously, there's just no meat on these bones whatsoever. But Lutnick does promise us that we should have a approval of whatever this is by tomorrow. So hopefully we get
Oh,
some
good.
colour today about what they are actually going to approve. Because at the moment, no one has a fucking clue.
No, and this is actually very much in keeping with other trade quote unquote deals that the United States has struck. I mean, you recall, of course, the UK-US trade deal. Well, that was about 4 weeks ago now, I think, and to the best of my knowledge, it still hasn't even been written down. So, yeah, very much a case of being
All
short on
fart, no
details.
poo.
Yes, eloquently put. Moving swiftly on from that analogy, it must be said that there hasn't been much by way of market impact from that news, which, as I said, broke overnight. S&P futures are basically where they were this time yesterday, to be completely honest with you. Treasuries have not really budged too much either, and the same can be said for the foreign exchange complex, where we see relatively tight ranges continuing to be well respected. In terms of other trade headlines from yesterday, we did have some further reports late on that the US and Mexico, they are reportedly close to a deal to cut steel tariffs, but they would only be there would also be a cap on imports. So essentially you can have a 0% tariff on a certain amount of steel coming in. Anything above that is subject to the 50% levy. Again, this is something that Trump would apparently need to sign off on. His in-tray is piling up quite significantly, and he spent most of yesterday watching helicopters fly around a military base. So I'll leave you to judge whether that was a good use of his time or not. And lastly, on the issue of trade, Bloomberg citing sources familiar with the matter about an hour ago now, noting that the European Union are aiming to extend trade talks with the United States past the deadline on the 8th of July. Of course, the 9th of July is when the EU is due to get hit with a 50% tariff on its exports to the United States. Now, this headline, to be completely honest with you, Bloomberg, I love you, but it was a little bit misleading when you read into the remainder of the article. What the EU are looking to do is to agree, in a best case scenario, this must be said, to agree the principles of a deal by early July, and then have further talks taking place after early July to allow all of the details to be thrashed out and a more formal agreement to be reached. Now, this really is, one, not surprising, and two, is very much in keeping with what everyone else is seeking
Yeah.
to do. Get a sort of framework, get a structure of what you're going to discuss, and then have more talks take place once the tariffs have been either eradicated or reduced to a much, much more manageable level. So, to be completely honest, I'm not entirely sure there's much by way of surprise in those headlines, and it's completely understandable why markets have really not reacted
But
to
this
that
is the
at
thing.
all.
So on this, it's just worth noting that Trump himself is against this kind of this kind of way of doing things, because as he's mentioned in the past, what he doesn't like is how these things get dragged out sometimes over years, where they're trying to pinpoint the detail before a deal is reached. And I think we've got to be mindful that a lot of nations are using this ploy in a way to reduce or remove the tariffs whilst we're talking or whilst we're in dialogue, and really just stretch that out for as long as possible. So it'd be interesting to see if Trump's even willing to do this, or whether or not he says, look, actually, I want pen on paper before that set date. So I think we need to know more colour from the administration about that.
Yes, but I'd argue he's already demonstrated his willingness to do it because he's done it with the UK and he's done it with China already. So,
Yeah, but still, this is Trump we're talking about,
oh
so
yeah,
let's
absolutely.
not
And of course,
pin anything down.
he hates the EU more than Nigel Farage, so you've got to
This
bear
is
that in
it.
mind as well.
This is it.
Um, Anyway, away from trade, what else did we have? We had some jobs data out of the UK yesterday, which was absolutely grim, to be completely honest with you. Unemployment rising to 4.6% in the 3 months to April. That is a new high since the middle of 2021. Earnings growth still incompatible with BOE's 2% target at 5.3% on an annual basis. If you look at overall pay, 5.2% on the year if you look at just regular pay. Although we have seen earnings growth continuing to cool off. And actually, what is interesting and worrying in equal measure is that we now see public sector earnings growth outpacing private sector earnings growth here in the UK, which is, as I say, rather alarming. The more timely indicators within that jobs report has always come from the HMRC payrolls data. This data referencing May, and HMRC payroll employment fell by 109,000 last month. That is
Yeesh.
not a typo. That is the biggest 1 month decline in employment since May of 2020, which of course you recall was when the economy was being battered by a small thing called COVID. It also means that in total, since the budget last October, when Chancellor Rachel Reeves announced the national insurance increases, the UK economy has lost 276,000 jobs in the last 8 months or so. Who on earth
Ridiculous.
who on earth would have guessed that if you raise the cost of employment, it leads to less people being employed? Only every single person who's commented on the budget. Money markets now fully discounting to 25 basis point cuts from the BOE by the end of this year. The OIS curve prices those for September and December. To be completely honest, if the BOE are going to do just 2 cuts, it will be August and November, because they are the forecast meetings and that is when they prefer to move. But nonetheless, my own view is that that still is a little bit overly aggressive in terms of market pricing, given how rapidly the labour market continues to weaken here in the UK. Other bits and bobs from yesterday, well, actually just sticking with the UK. a classic example of how the stock market is not the economy, because you had that dismal jobs data. You had sterling down by about a big figure intraday. What did the FTSE do? Well, it traded to a new record high. We finished just shy of a record close, but we did nonetheless hit an intraday record, which quite frankly tells you all you need to know about what equities are trading on the back of at this moment in time. Over in the United States, we did have a 3-year Treasury auction yesterday, tailing the when issued by 0.4 basis points. Usually that would be pretty unremarkable, but I do mention it because it is a little bit soft, and it comes ahead of a 10-year sale today and a 30-year sale tomorrow, which will be much, much bigger tests for the market to absorb. Speaking of Treasuries, reporting via Bloomberg yesterday, noting that Treasury Secretary Scott Bessent is seen as a contender to be the next Fed chair. Of course, Chair Powell's term expires in May of 2026, May next year, and President Trump was speaking relatively recently, actually, saying that we would know the name of his nominee, quote, very soon. Obviously, we don't know actually how soon that will be, but it is very surprising, to say the least, that the Treasury Secretary may be in the running to become Fed chair. I don't think that would be particularly well received by financial
No,
markets.
absolutely not.
The White House, of course, did not respond to a request for comment on this issue, but the Bloomberg also reporting that formal interviews for the role have not yet begun, and other candidates who remain in the running include Kevin Warsh. This one always makes me laugh, to be honest, because Kevin Warsh, when he was actually on the Fed, he was a governor back in the day, was always known for being one of the more hawkish members of the Board of Governors. He's now apparently one of Trump's favourites to become Fed chair when Trump is running around clamouring for rates to be cut by 100 basis points. So I can only see that one ending in tears. Other candidates include Kevin Hassett, who is, of course, running the NEC at the moment. Again, that would be pretty badly received, because you're appointing, blatantly appointing a political official to run the central bank. Also, Christopher Waller, who is currently on the Board of Governors. He was also one of Trump's picks during his first term, and would probably be, I would argue, the easiest of those three or those four
Yeah, I think
to
that
get
would be
confirmed by the Senate.
that. I think it'd be interesting to see. I've not seen if there's better markets open for this yet, but in my opinion, it'd probably be he should be the favourite, but just purely because he's the most acceptable to financial markets at the moment.
Yes, I would fully agree with that. And 3 stories lastly from me in the realm of AI. Firstly, Mark Zuckerberg over at Meta. He is apparently creating, and I quote here, an AI superintelligence team. He's going to hire 50 people for this new team, who are apparently going to sit next to him in the office. And the goal, as a result of that, is to allow Meta to, and I quote again, outstrip other tech companies in achieving artificial general intelligence. Good for them, I guess. Secondly, in the AI space, Reuters sources reporting yesterday that OpenAI and Google are to strike a, quote, unprecedented cloud deal, despite their rivalry in terms of AI. I think OpenAI trying to reduce their reliance on Microsoft a little bit with this one. And last but by no means least from me for the moment, Starbucks. They are to roll out the Azure OpenAI assistant for their baristas in the United States. I mean, why?
What does this mean? What?
Why the
What?
hell do we need AI to make coffee, for God's sake? I mean, that just smacks of a solution looking for a problem, to be honest. I'm sure Tom Talks Cars is furiously typing away that AI can make a better mocha frappa latte chino thing than a human can, but to be honest, I think that's utterly mental and a complete waste of money.
What's your favourite coffee, Michael?
Latte, 3 shots.
Oh, look at you.
Nice and simple, mate.
Strong and black for me. Moving on.
Well, I thought, what happens in Vegas, mate?
Hey, ba-bum. Right, thank you for that. Whilst my voice still slightly is coherent, try and read out some of these overnight news headlines courtesy of the awesome Zach Eisman. I haven't done a Substack this morning, apologies. But yes, so reading out some of these choice headlines from Zach's post, where he obviously scours the internet for the headlines that matter. So we've gone through some of the China-US trade talk stuff with Michael already. China pushes US to ease tech export curbs in fiery trade talks. Beijing demands looser restrictions on chips and tech. Though specifics of the agreement remain under wraps, as Michael said, it's all fart no poo so far. We've got nothing on the bones of this. Trump's tariffs stay alive as appeals court grants temporary reprieve. A federal court fast-tracks the case for July 31st, keeping steep duties in place for now. China's JL Mag secures US rare earth magnet export permits. The major supplier's licenses signals Beijing's move to ease critical minerals restrictions, boosting supply chains. US-Mexico nears steel tariff relief deal, echoing past truce. A revamped agreement aims to lift 50% steel duties up to a set volume. As again, Michael mentioned earlier, this seems to be something that we need to get over the line. But as myself and funny enough, Angie, who I can see listening in, morning Angie, got to say, Scheinbaum, obviously the leader of Mexico, I would say, if you were going to stick a gold star on any of the world leaders that are kind of playing this very well, my money would be on Scheinbaum. I think that Mexico seems to be doing all the work needed to keep America kind of happy, or Trump happy at the moment. Global powers beg Trump to spare aircraft tariffs. China, EU and airlines worldwide urge the White House to avoid crippling duties on planes and parts. In macro news, Fed rate cut bets dwindle to one as inflation sticks and growth hums. Traders scale back expectations, seeing resilient US growth and tariff-driven price pressures delaying easing. The Air Force slashes the F-35 order, denting Lockheed Martin's prospects, halving its request for the jet deals, a blow to the top US defense contractors' order book. Bank of Japan, they're likely to skip 2025 rate hike, wary of US tariffs. A Reuters poll shows that economists expect to pause until 2026, citing trade policy uncertainties. China reins in hog production to bolster pork prices and fight deflation. Beijing's move to curb supply aims to stabilise the market's favourite meat and ease price pressures. ECB's Lagarde, she's calling for trade war concessions to avert economic pain. The central bank chief urges compromise to resolve global tariff disputes and protect growth. In Japan's wholesale inflation is slowing, but food prices surge. Falling raw material costs ease pressure, yet rising food and beverage prices signal cost cut pass-through. UK house prices defy odds, climb in May post-tax break. What we're doing here. Nationwide survey shows resilient demand, but buoying the housing market despite economic headwinds. In geopolitics, North Korea's nuclear complex grows, hinting at new enrichment sites. Satellite imagery reveals potential facility, escalating fears of Pyongyang's weapons build-up. And Taiwan faces China's relentless military flexing in May. Daily warship deployments ramp up Beijing's pressure, challenging Taipei's defense and regional calm. Finally, for me, before we head back to you and I can try and give my voice a break, equities. Google dangles buyout to US staff for funds AI spending spree. The tech giant's cost-cutting move aims to redirect billions towards its ambitious AI initiatives. GM, the car maker, pumps $4 billion into US plants to dodge tariff sting. The automaker ramps up domestic production to shield itself from Trump's import duties. Sticking with cars and obviously moving to Musk, Tesla's Musk sets June 22nd for Austin robo-taxi launch. The tentative debut marks a bold step in Tesla's quest to lead the driverless revolution. Bullish global.
Actually, sorry, I was going to say, just while you're
Go on.
talking about Musk, of course, you will have missed last week while you were drunk or
Oh,
whatever
certainly
else you're
not.
doing, the soap
Certainly not.
opera between Musk and Trump. I think the Donald's lawyers have got in touch, given what
Oh, yeah.
Musk posted this morning about how he regrets what he said and he went too far with some of those posts last week.
Well, could this be stuff linked to him suggesting that he might be a bit of a nonce on the Epstein Island?
Yeah, I didn't want to go down that route, but yes, I would imagine it probably is.
Yeah, there we
I
go.
must admit, it did give me a chuckle hearing Adam Linton have to squawk that at 8 o'clock this morning. We know how straight-laced he is on that microphone.
Yeah, very much so. Bullish Global, backed by Till, files US crypto IPO. The exchange's move capitalizes on crypto's rising tide, eyeing a high-profile market debut. Chinese car makers vow 60-day supplier payments amid price war fallout. Major manufacturers respond to steelmakers' outcry and regulatory pressure to stabilize supply chains. Nintendo Switch 2 smashes records with a 3.5 million units sold. The console's blockbuster launch in 4 days signals a triumphant return for the gaming giant. And yeah, I think that might be it from me. back to you in the studio.
Very good, thank you, Ryan, and well done for soldiering through that. You can have a rest for 5 minutes now.
Thank you, mate.
Right, in terms of today, then, while Ryan recovers, there are a few bits and bobs for the rest of us to get through in terms of the economic docket. In Europe this morning, in about 10 minutes' time, actually, we get the latest wage tracking data out of the ECB. Not going to materially shift the outlook, to be completely honest with you, particularly given the ECB saying last week that policy is in a good place and that they are now well positioned with the deposit rate at 2%. It looks like they're going to try and ensure that their cutting cycle is now done and dusted. Moving through the remainder of the morning, this lunchtime, around about 12:30, just after Prime Minister's questions, the Chancellor Rachel Reeves is due to deliver the spending review in the House of Commons. To be completely honest, I don't envisage this being a hugely market-moving event. This is not necessarily Rachel Reeves saying how much is going to be spent. It's more about taking the spending envelope and allocating that to individual government departments. So I don't think it's going to be too much of a market mover. There's certainly not going to be anything by way of OBR forecasts or anything like that around today's event. It will attract some headlines, so do be on alert for that. But fundamentally, I don't think the pound or gilt are going to care especially much. Markets will, though, likely care much more about the latest US inflation figures. We have the May CPI numbers due at 1:30 this afternoon London time, 8:30 this morning on the east coast of the States. Headline CPI, that's seen holding steady at 0.2% on a month-on-month basis in May, though the annual rate of inflation is expected to tick higher to 2.5% from a prior 2.3%. Core inflation, meanwhile, that's seen rising to 0.3% on the month, up from a 0.2% that we saw in April, while the annual rate is also set to increase to 2.9% for a prior 2.8%. The data will be incredibly closely watched, and I think focus will fall primarily on goods prices in particular, with May likely to be the first month where we begin to see some of these tariff-induced price pressures potentially starting to show up in the data. Now, of course, recall that there are no tariffs, as of the time of recording, usual caveats apply, there are no tariffs being levied on services. So it is very much a case of having a sort of laser-like focus on goods prices, as that will show the degree to which the tariffs that have been imposed are being passed on in the form of higher prices paid by consumers. The market is pricing absolutely nothing for the Fed meeting next Wednesday. No chance of any move there. The next 25 basis point cut per the OIS curve, that is fully priced by the October meeting, and we have around 46 basis points worth of cuts priced by the end of the year. Obviously, we have seen a bit of a hawkish repricing after that solid jobs report that we had on Friday. In terms of other things of note, at 6 o'clock this evening, as I alluded to earlier, we do have a 10-year Treasury auction, $39 billion worth being sold off. And then in terms of earnings, earnings season is pretty much done and dusted at this point, but nonetheless, after the market close, we are due to hear from Oracle, who have some involvement in the AI theme, and they're also constantly linked to potentially buying TikTok as well. So perhaps one to watch there. And of course, throughout the day, markets will be paying any attention to sources stories or official readouts from those US-China trade talks that concluded yesterday, as we continue to hunt around for some greater detail as to not only what was discussed, but also what was agreed. And for now, that's all from me.
Michael, thank you so much, as usual, for carrying me, especially today. I'm going to go and try and gurgle some salt water. Listeners, it's good to be back. I hope you've been able to understand a word I've said. Yeah, stay safe, much love, and we'll see you all tomorrow. Bye bye.
Bye for now.